Hey, it's Similogo here, and in this video we're going to buy some NVIDIA contracts. Why NVIDIA? NVIDIA is a company, don't know much about it. I don't really need to know anything about it other than the fact that its stock price is going up today. So I want to make money as it goes up. Okay, so now for those of you who are completely new to my videos, I'm doing a series on options trading, and this platform that I'm using is called Thinkorswim, and it's by TD Ameritrade. The link is in the description box below. Click on it and open up an account. The beauty of this particular platform is the fact that you can paper trade, so you can trade with fake money really. And here I have an option buying power, $98,000. I can reduce that if I like. I could reduce that to about $25,000, but I'm fine with this for now. And we're going to go down to this tab here. We're going to put in the symbol NVDA, which is for the company NVIDIA. We'll click on this, and that'll pull up the data. Okay, so right now this stock is trading at $278 and change, and we have up on the top middle bar up here charts. We click on charts and we can see that we have some upward movement here. Now this is a 30-minute chart, and all that means is each one of these candlesticks represents 30 minutes. And since the market opened today, which is right here where my vertical line is, you can see that the stock has been going up. It opened at $272, and right now it's trading at $279. Okay, so let's go back to trade. We'll click on trade, and then we are going to, let me close these. Okay, so here under the trade tab, we have the NVIDIA, the underlying, and these are the option contracts. We get these from there, the option chain. So we click on option chain, and it brings up these contracts. Now today is the 20th of September 2018, so I don't want to buy any contracts that are expiring today. So I'll go for the very next week where the options expire. The 5th of October, which is a week from now. We'll click on this, and it'll show us all these contract prices. Now here it says strikes 8. We can actually pull up as many. Right here it shows us 1, 2, 3, 4. So eight prices here on the call side, and 8 here on the put side. I usually like to have a few more to look at whilst I'm shopping around for which contract might be best for me to buy today. Now calls, we're only interested in calls when the market is going up. So we have a bullish market, and so we want to make money as the market goes up. These are the prices that we want to buy the contract at. These are called the strike price. Right now NVIDIA is trading at 278. And we want to buy one of these that are not highlighted in blue. So if we believe that this price of $278 can go up $2 to $280 by next week, then we purchase this one. The last price paid on this was $400. It says $4 here, but bear in mind this is for every 100 shares. So you multiply by 100. So this $4.11 is actually $411 you're going to pay for this contract. The further out you go in price, from 280, 285 and on, the cheaper the contract becomes. Now, my philosophy, and I have read everywhere I've gone, my books that I'm using to learn more about option trading, on websites that I go, or YouTube videos, the general thought is generally that you have to be prepared to lose whatever you put into options trading. So you really especially if you're starting out, you don't want to start off with these great big amounts. $400 is a lot, I think, to invest. Now, yeah, it's a lot to invest because it's a lot to lose. So if we go down to, say, the last price paid here was $125 or even $174. Now, if we want to select between these two, do we do $174? Do we do $124? It's usually good practice to go for wherever you have the greatest volume. So here we have more buyers here on this 125, and we also have more open contracts. Here you see open interest here. So this might be a better one to go for, but I mean, there are other factors, but as you really dig into options, for instance, delta is a very important figure to look at. So do we go for a delta of 25 cents or of 19 cents? Usually you want to go for the higher delta. So you know what? Let's go for the higher delta. Okay, so let's right click on $174. Contract, buy, and single. Okay, so what do we have here? Let's close these. So we have our order. Before we click send, we're going to check this over. We're buying, we're not selling. We don't want 10 contracts. We only want 1. We're buying NVIDIA options to expire a week from now. And we're believing that the price will hit 287 in a week's time. And we're buying calls. And I believe I can move that. Okay. Our limit price. For the purposes of this video, I'll just click on market. We just want to buy this thing. We'll click confirm and send, and it still gives you one more opportunity to go over exactly what you're planning to spend your money on. And it tells you the maximum profit you can make is infinite, because the price of this stock can go to the moon and you can make money as it's going to the moon. It tells you the most you can learn is what you, the most you can lose is what you have invested, which is $173. So we click send. And we hear that notification. It says it's filled. Okay, so that's the first step. The next thing you want to do is to monitor your trade, at least see what's going on. You click on monitor, top left, and let's see. Okay, and right here you have these little buttons that just show you the various positions you hold. You click that again, you can see I hold Amazon and now NVIDIA. So we'll click on NVIDIA, and there's our trade. We bought 1 contract. It's going to expire in 7 days. So within that 7-day period, you want to sell it at a profit. We bought it at a trade price of $1.63, so that's $163. Right now, the market price is $1.68, so we've made $5.16, $5.91. So, well, if we keep watching it, that particular stock is going up. As the price of the underlying, which is the stock, as the price of the underlying goes up, the price of the option goes up. So let's watch this for a little while longer, just right here where my cursor is pointing. Okay, so what I'll do is I'll pause the video and I'll come back in a few minutes. See, it's been about, let me see, about an hour. Let's see how we're trading. We're going to look under monitor, click monitor, under position statement, and here we see the options I'm holding. Of course, it's paper money. It would be nice if it's real money, but we need to be sure of what we're doing. This is why we first, it's good advice to kind of hone your skills practicing with pretend money. We'll click on NVIDIA and let's see how much we've made. Click. We bought 1 option It expires in 7 days. We bought it at $1.63. It's now trading at $2.05 after 1 hour. So if we want to sell, so this is how much we have made on that contract in 1 hour. So you could decide to sell now and keep your $42. You could decide based on your analysis, your chart analysis. Like today is a Friday. You want to be sure that this stock will keep on going up come the next week. So we can sell it for $42, or if after real analysis, we've done our thorough homework, we're sure that we can improve on this, or we're even sure we can double our money from $1.63 to $3.20, then you hold it. So assuming we want to sell, it's dropping already. The fact that it drops doesn't really mean anything. Before I sell, I'll take us over to the charts and let's see what's going on here. So, and here we are, the 30 minutes. So let's do the 1 minute, no, 5 minute chart. And let's hold the key on our left on our mouse and drag it to zoom in, and zoom in a little more. And this is a 5 minute chart. I like to look at the 1 minute chart as well to just see what's really going on from minute to minute. And we can see over the past 10 minutes or so, the price of this stock has been going up. Now we do have a big drop in price here. We have a little rebound, another drop. Based on your analysis, which is a whole completely different field in itself, knowing how to analyze the movement of stock, you can decide to hold your stock or you can decide to sell. So we're selling for the purposes of this video. We'll click on trade. Nope, we click on monitor. We go back, we're down again, $36. We're going to highlight here and right click. When you right click, here we have, it says create closing order, and we're going to click on this. And as soon as we click, there it is. It's a sell. We're selling one contract and all that. This is the limit price, and for the purpose of this video, we'll sell at market rate. Click confirm and send. Go over the confirmation box, make sure everything's in order. Click send, and ta-da! You just bought and sold a contract, and your proceeds. Let's see whether, okay, now it's been filled. So let's see if we can see our proceeds. Under monitor, we can look, and it basically tells us we made $44 in this trade. Of course, if you purchased more than one contract, we only did one contract, then you would have made twice of this amount. And anybody who could have afforded 10 contracts would have made 10 times this amount. And that's basically, my friends, how we make money or how we lose money trading options. Now, if you found any value in this video, I would appreciate a like below. Comment if you have any questions. I'll try my best to answer them. Click on the link to set up your own Thinkorswim account. And also, I have other links in my description box to set up other accounts depending on what kind of trading meets your needs. And there is also a link below to open an account with First Trade here. This is a platform I just found recently, and you pay $0 for every trade, so which is a nice little touch there. And I will meet you on the next video.